Mortgage rates are finally back below 7% after last week's jobs report, and the 10-year yield is back within our yearly prediction range. And not surprisingly, as a result of rates dropping, we saw a big jump this week in the number of people applying for mortgages. Housing inventory had another tiny increase, and we are now officially back above 500,000 homes for sale in the country. New construction homes are still flying off the shelves right now. There has been a clear increase in demand in the new construction market, and as a result, builders are raising prices every single week. We're covering all this and much more in today's weekly update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering the national market as well as both Dallas and Collin counties. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases or increases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked charts of both hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that is in the description below. Okay, today is March 11th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here to get to the latest weekly update. First up is market news. Last week, we got the jobs report numbers. And basically, the reason the Fed hasn't cut rates yet, since inflation is well under control and under their 2% target already, is that unemployment is still too low. They believe too many people are employed, wages are too high, so too many people making too much money will lead to further inflation. So their belief is if they were to cut rates now, money gets cheaper, businesses then have even more to spend and grow their companies, hiring more people, which will lead to more inflation. So in their mind, they have to keep rates high to prevent this. So the Fed wants to see unemployment increasing before it's going to cut the federal funds rate. I know it sounds backwards, but if you want low mortgage rates, then some people are going to have to lose their jobs and we're going to have to see higher unemployment. But the other side of this equation is the Fed only controls the funds rate. Mortgage rates are actually decided by the bond market, which does closely follow the federal funds rate, but it moves much quicker. So for example, once this jobs data was released and unemployment hadn't gone lower, the bond market decided rates could come down. So the 10-year dropped, which then made mortgage rates drop. Remember, all of these mortgage rate changes from 8% down to 6.6%, back up to 7.18%, all of that is happening without the Fed cutting rates at all. So the federal funds rate hasn't changed, Fed hasn't cut rates, but mortgage rates are still swinging wildly. That's because the bond market is the one who actually controls these things. So don't focus too heavily on the Fed. Eventually, they will cut rates, but by the time that they do, the bond market will likely have cut rates already long before that. But long story short on the jobs data, unemployment ticked up slightly to 3.9%. Jobless claims remained flat, and the 4-week moving average actually ticked down a little bit by only 750 for a total of 212,500 unemployment claims. We also added 275,000 jobs in February, so we're still adding a ton of jobs and the economy is still very strong. And as of now, we have just under 158 million people employed in the US. Okay, moving on. Let's start by looking at national housing inventory. This week we had a tiny increase of just 2,240 more homes for sale in the US compared to last week. We've been talking about this every week, but historically speaking, we should see the bottom of inventory at end of January or early February. However, since COVID, the bottom of inventory for the year actually started in March and only got later from there until last year. It was all the way at April 14th. So that's over here. This was April 14th. But so far this year, it's looking very likely that we already saw the bottom, and this was back on February 16th. So barring any huge drop in mortgage rates or any big changes that would cause a flood of demand, I think there's a good chance we've already seen the bottom for the year, which would make this the closest we've been to a normal seasonal bottom since COVID happened, which is good news. Now let's look at new listings. This week there were 8,556 more homes listed than the corresponding week last year. That's this bright red line, that's 2023, that was last year. As you can see, there's a big gap. However, it was actually a few less homes than what we saw in 2022, which just makes it pretty consistent. You can see we're tracking pretty closely to 2022 numbers. We're hoping that trend's going to continue. Realistically, we need to be well above this light red line, which is 2022. But if you look back at 2023, there were no homes being listed, especially in the spring. So I'm very hopeful that for sure we're going to be beating 2023, but ideally we're going to get quite a bit above 2022 as well. But so far, very disappointing to see. We're just tracking pretty much exactly with 22 numbers. So we also need more people listing their homes than this, but we'll also need higher days on market, which can come in if rates stay high. That will allow inventory to stack up for a bit and allow us to get to a healthier market. So we are not there yet. And then the last thing we cover nationally is a percentage of homes having price decreases. What you need to know, every year it's normal for a third of homes to take price cuts before selling, and this depends highly on mortgage rates. It's also very seasonal. But looking at the chart, this week we're at 30.5% of homes having a price decreases, barely down from last year's 30.6%. We're literally 0.1% away from where we were last year, and that's a big deal because all of last year we were about 3 to 4% below the previous year. So what this shows as well is things are starting to get back to a normal. It's not the dramatic 4% less homes having price cuts. We're getting back to something more normal. Basically, what we want this year is for any extremes to be removed because we've been having a lot of extremes in both directions for the last several years. And what you need to know is typically the number of homes having price decreases will start to go up around now. So we're getting close to the time seasonally, plus inventory is increasing, plus mortgage rates are still pretty high. We should be seeing the number of homes having price cuts starting to go up soon. Okay, moving on to mortgage rates. We started the week at a 7.09. We had the jobs data come out and we got all the way down to a 6.85. That's where we're starting this week. Now, regarding mortgage purchase applications, this week we actually saw an 11% increase in the number of people applying for mortgages. So after 5 straight weeks of negative purchase application data, as rates were climbing, now that they're dropping again, we see a sharp increase. So mortgage rates are still fully in control of this market. When rates go up, less people are applying. As soon as rates drop, more people are applying for mortgages. Okay, before we move on to the local market data, if you're considering buying a home in Dallas in 2024, 2 things. Number 1, I'm now doing a weekly online home buying webinar. This is for anyone thinking of buying a home in the DFW area in the next year. If that's you, click the link in the description. You can sign up for the next one or you can watch a replay. And number 2, I've developed a max affordability calculator that will very quickly and easily get you into the ballpark of how much home should you actually be looking for based on today's rates and your personal financial situation. It will give you several different options to review, and it takes into account everything all the way down to your tax bracket. It's free to use, so please take advantage of it. If you want to learn more about it, watch this video next. Okay, now we're moving on to the local markets. We always start with the MLS data to see what actually happened last week. Starting with Dallas County, we had 536 homes listed in the last 7 days. That's 121 more than last week. 262 closings, 71 less than last week. 370 homes went under contract. That's 97 more than last week. Of the homes that closed, 85 were immediate sales. That's 13 less than the previous week. And in total, there are 2,316 homes either under contract or in pending status. That's 495 more than last week. Moving on to Collin County, there were 322 new listings. That's 3 less than last week. 203 closings. That's 141 less than last week. 207 went under contract. That's 30 more than last week. Of the homes that sold, 83 were immediate sales. That's 38 more than last week. In total, there are 1,762 homes either under contract or in pending status. That's 210 more than last week. So overall, less closings last week, but way more homes went under contract. Okay, moving on to the local housing data. If you watch my videos, you know I look at the Market Action Index, which just takes into account all of this data, puts it in one easy to read graphic with a number. Anything A30 or below is a buyer's market. Anything above that, we're asking how much of a seller's market are we in? And this week is a big deal because we moved finally from a slight seller's market to a strong seller's market, which starts at a 45. And again, all we're really looking at here is anything looking weird or is everything looking normal? And so far, everything is just looking normal. You can see we had small climbs in median list price and also in the price of new listings. Days on market is dropping a bit, but this is totally expected. We're here at March 11th. The market should be heating up through the summer. So nothing sharp or dramatic, just a slight curve up. That's what we're going to see. So that's what you see in Dallas. Nothing unusual. Things are going to be heating up. Prices are going to be going up through the summer. That's it. Now looking at Collin County, it's always a little bit different because they have a lot of new construction in their market. There's still a strong seller's market as well. You can see we did have some sharp jumps up in pricing of the median list price, $565 all the way up to about $579. But again, we don't look at those 1 week increases. We need to see a trend, so it could come right back down next week. The median price of new listings, though, took an $85,000 jump. Again, we don't know if it's a trend yet. Median days on market took a little drop, but it's still within this range. It hasn't broken down below 35 yet. The big number we talk about every week for Collin County is the number of homes having price increases, and this week we had another 8% of homes have price increases. That is a huge amount of homes. That's mostly going to be new construction. And I talk about this stat every week, so I wanted to look at it a little further and give you a better idea of what this actually means. But basically, in Collin County right now, there are 2,701 active listings. So 8% of that means 216 homes had a price increases. And I'm going to assume that all of the homes having price increases are going to be new construction. It's not normal for someone to list a home resale and then increase the price unless they accidentally, typed it in wrong to begin with. But I'm assuming this is all new construction. Now, when I look further, there are only 665 new construction homes listed. So 216 of the 665 new construction homes had a price increase just this week. So that would mean that somewhere between 32 and 33% of new construction homes had a price increase. So about 1/3 of new construction homes are having a price increase every week. Now, sometimes that increase is only $1,000, but sometimes it's $5,000 or $10,000. But the point I'm trying to make with this number is that whatever the builders are seeing there on the ground in their communities is telling them there is enough demand coming to justify higher prices every single week. Okay, that's enough of that. That's what the local markets are looking like. Things are heating up and looking normal. Now we're moving on to the top 10 ranked charts. These are the hottest and coolest, both cities and zip codes in all of Dallas and Collin counties. This is using that same market action index number, the 1 to 100. Remember, a 30 or above, we're asking how much of a seller's market are we in. So the top is almost a 60, so way, way, way hotter than a buyer's market. So starting with the hottest cities, Louisville remains in the number 1 spot at a 59.52, followed by Coppell, which jumps up 2 spots. Grapevine remains. Carrollton cools off 2 spots. Plano remains. Richardson heats up 1. Allen cools off 1. Sachse and Garland remain in spots 8 and 9. And the biggest surprise of the year, Ferris, Texas. Ferris, Texas actually just in, in January, on January 5th, was a buyer's market. One of only 2 buyer's markets we've ever seen since I've been tracking. And since January 5th, it's gone from the only buyer's market, or one of 2 buyer's markets, all the way up to the number 10 hottest city. Now, Ferris, Texas is not that big, so the data can skew real fast if they get a few sales. This is the only time I've seen anything like this. I think it's absolutely wild. And there's a lot of new construction in Ferris, prices going up there as well. And if I had to guess, I would say investors have probably come in and started buying there. And like I said, it doesn't take very many sales to drop their inventory very quickly because it's a smaller city. Okay, moving on to the top zip codes. The absolute hottest is Garland, 75042, followed by Frisco, 75035. Louisville 75077, Plano 75023, Carrollton 75006, Louisville 75067, Dallas 75287, Carrollton 75010, Irving 75063, and Dallas 75231. Okay, now moving on to the same thing, but looking at the coolest markets. The absolute coolest city and the only buyer's market in existence here in the DFW market would be Van Alstyne at a 28.44, followed by Leonard and Whitewright. Those 3 kept their spots as the 3 coolest, followed by Blue Ridge, which cooled off 3. Seagoville remains, Nevada heats up 2, Rockwall heats up 1, Farmersville and Rowlett remain in 8 and 9, and for number 10, Red Oak jumps onto the number 10 spot and replaces Lavon, which was there last week. Now looking at the zip codes, the absolute coolest, Van Alstyne 75495, Dallas 75246, this zip code is a buyer's market, Dallas 75204, Dallas 75203, Leonard 75452, Whitewright 75491, Blue Ridge 75424, Grand Prairie 75054, Rowlett 75088, and Dallas 75212. All right, that's it for this week. As always, if you're looking to buy or sell in the Dallas area, call, text, or shoot me an email. I'd love to connect. Thank you for watching, and I'll see you in the next video.